Okay, today is the day that the Lord has made. Let us rejoice and be glad in it. This is Paula, thathealthlady.com. My email, paula@thathealthlady.com. You can go to my website. You can find all kinds of great stuff. Just know that I am not a doctor. I do my videos specifically for your entertainment and possible educational purposes only. And I am licensed in life, health, property, and casualty. And I do have a background in real estate, mortgages, and insurance. So 40 years of that, 20 years, give or take, of natural health and certain multiple certifications. So I kind of have an idea of what I'm talking about. Not as much as a lot of these other people out there, but more than your average person that I've talked to sometimes. So let's talk about, what shall we talk about today? Let's talk about the difference between insurances, okay? Indemnity plans versus a regular insurance plan versus a shared program. So a sharing program would be like Christian Health Ministries, MediShare. There's probably half a dozen of them out there right now where people pay they pay a flat fee every month, and it goes towards paying everybody else's bills. It does not have an insurance covering. It is not insurance. The premiums tend to be lower. They tend to have caveats in them where you cannot use certain terminology for the same thing. It's just for legal purposes. You can't call it a policy. You don't call it a insurance. You don't have premiums. You have contributions, so the language is just a legal mumbo jumbo, but you got to get through that so that you understand. And the deductibles, most of these plans, most of the share plans do not have doctor visits, although 2 of them have recently come out where they will cover doctor visits for a small contribution, okay? And if I mix up my terminology, please do not come after me. I'm not being plan specific. I'm talking generically right now, just a generic. I'm doing my best to stay compliant with what the industry requires, but I also choose for you to understand what I'm talking about. So if you choose to go forward with me and we have a real face-to-face meeting, then I will be much more concise and I'll be able to answer your questions and show you things in writing and help you also to convert the language so that everybody is compliant. But for the purposes of this video, for a quick overview of the differences between the insurance coverage, because we all need insurance. It protects our finances, it protects our peace of mind, it can help get us medical attention that we require, okay? Not just that we need or desire, but stuff that actually we require. Now it's true currently, if you go to an ER, they are required to give you the help that you need. However, to go in, see a doctor, and be given an aspirin and sent home will average about $3,000 to $6,000. I know because I've done that, unfortunately. So we choose to be very capable and wise with our money, right? And to be wise with our decisions and what we have and how we can protect ourselves. So with insurance, it's important. Most of these shared insurance coverages, programs, will require some type of faith-based. They will ask you specifically, are you a Christian? They will ask you specifically, are you of this denomination? They may ask you, are you a person of faith? Or are you a spiritual person? Okay, so you really should answer those questions honestly. And if you don't belong to those beliefs, then don't participate. It's really quite that simple. And the reason they ask these questions is because people of faith will have less liability in their lifestyle most of the time, not always, but a lot of people, they won't be sleeping around and having sex out of marriage. They won't be smoking. They won't be doing drugs or alcohol abuse. They won't be driving while they're drunk. They'll tend to eat more natural. They'll listen to the roosters with the wake-up call, regardless of the time of day. So there's reasons that they ask that, and it's the reasons that their underwriting seems to be more lax, and their premiums or their contributions on a monthly basis are less because there's less risk. Okay, insurance is all about risk. Who takes the risk? And in a regular insurance policy, all the money goes into a bucket, and we all pay everybody's money is coming in and out of there, very similar to the shared program. And with this new affordable health care, the premiums are based on everybody being the same. Same that a 40-year-old man has a pregnancy issue. Really? The same that a 3-year-old has a pneumonia Parkinson's issue. Really? So that's why if you're not being subsidized, those premiums are astronomical, and they have almost no coverage, and there's still a shortage because funding, because healthcare costs are outrageous. So we want to use some wisdom in finding what the policies that are best. Having your basic Blue Cross, Blue Shield, Anthem, Cigna, Aetna, whatever you happen to have, is great. It's got a $15,000 deductible. You're on a 50-50 plan or an 80-20 plan or 60-40, 70-30, whatever you happen to be on. And you know your parameters. You can go to the doctor. You've got X amount of doctor visits. You've got this, you've got that. And in case of a catastrophe, you are self-insured for that deductible amount, as well as the part that's not covered. Okay, if it's a 70-30, you're responsible for 30%, they're responsible for 70%, and you're self-insured for that 30%. So then you can begin to supplement those with indemnity plans and other plans that have the coverage to insure you for that little bit. Insurance companies do it all the time. They're called reinsurance companies. It's a big business. Okay, trust me, it's a big business, and they end up winning. That's the bottom line. Okay, they end up winning. But we can find our way through the maze, and we can self-insure for some things and then get other additional insurance policies to cover the others. So perhaps it makes sense financially to take your $5,000 deductible and turn it to a $25,000 deductible, save this much in your premiums by doing that, and then get a couple indemnity plans. And so you now end up saving this much on your premiums, and you have all kinds of coverage that you didn't have before. Now you can go to the doctor without an issue. You can go to the hospital without a deductible. You can maybe even get some elective surgery. I don't know. You can have your dental, you can have your vision, you can have all kinds of different things stacked on there. And then if something happens and you're put in the hospital, you'll actually get paid to be in there. And so I know one person in particular who ended up making money by having an appendectomy, because his insurance plan covered X amount and his indemnity plan covered X amount, and then he had a different plan for emergency stuff. And when they stacked on top of each other, he actually came out ahead of his medical bills, which was wonderful because he missed work, and he needed that extra income to support his family while he was out of work. So look into those different indemnity plans. Look into the shared medical expenses, a shared program. I can help you with 3 or 4 of the programs that are out there. I'm happy to do that. And look at some of the alternatives to your health insurance. And if you are an employer and you don't offer health insurance, it is actually one of the most affordable ways to give your employees a raise and to increase employee loyalty, because they've got benefits. Everybody wants the benefits. And this is a way that you can offer benefits that are actually usable, tangible benefits that they can use. And whether they pay for it or whether you pay for it is something that you can decide in your individual situation. But there's so many options. Talk with somebody that's licensed that can help you with that. Talk with somebody that can take your scenario. Let's say you don't want to give everybody a raise, but you have certain key employees that you would like to incentivize to stay with you, and other ones that know that if they're happy to pay $50 or $100 a month if you pay $50 or $100 a month, and now they've got really great coverage. And to you, it comes out to, you know, less than $1 an hour on a raise or something. And there's employees that you would like to keep that will make a difference. And I encourage you, if you have a small company, less than 100 people, contact me. Let's put a plan together and see your business succeed. Is a little challenging, but excuse me, just making way for the truth to come forward. So if you have a company, please contact me. I'm licensed currently in 5 states, Tennessee being my primary state. So if I'm not licensed in your state, perhaps I might be willing to get a license. We can research and see what's available for you in your state, because underwriting is different for every country, or every county, I mean, in every state. And that's all I have to say for right now. So get your insurance in line, stay healthy so you don't need it, and take care of your finances. This is That Health Lady signing off for now. Bye-bye.